Hi students, welcome to day 6 study plan of commerce. If you had not watched my previous videos, kindly watch and follow the study plan. Everyday questions and answers links are posted in the description box. Please refer the same. Students, let us watch day 6 questions. Lesson 5. First question, what is capital market? Capital market is a market where buyers and sellers engage in trading financial securities like bonds and stocks. The participants here are individuals and institutions. Now, who are the participants in capital market? There are many players in the capital market. The participants include individuals, corporate sectors, government banks, and other financial institutions. Here, how the prices are determined in capital market. It is depending on the demand and supply prevailing in the capital market. Price will be determined. Now we'll see the short answers from lesson 6. First one, what are the features of treasury bills? Here treasury bills has the following general features. First one is issuer. Here the mainly the treasury bills are issued by the central government, and RBI will issue on behalf of the government. And second characteristics is finance bills. It is always issued to raise the bill, raise the finance. And next is it has a high liquidity. Anytime you can convert into cash. And it play a vital source in the money market. And monetary management. Here it helps the business firms who are in need of money can raise. So it has a monetary management features. And who are the participants of money market? Here there are many participants operating in the money market. They are government of different countries and central banks of different countries and private and public banks, mutual fund institutions, insurance companies, non-banking financial institutions, RBI and SBI, commercial banks, state governments, public. So these are the participants in the money market. Now we'll see the types of treasury bills. Treasury bills are the money instrument which are issued by the government to raise whenever they have financial requirements for a short term, they will issue these treasury bills. So on the basis of the period, the treasury bills may be classified into three. The first one is 91 days, 182 days, and 364 days. If you have to remember these days, you remember 191 days. So if you double that, the second type you will get it. And then if you double 182 again, the 364, or otherwise you multiply by 2. 91 into 2 is 182, and then multiplied by 2 is 364. So these are the three types of treasury bills in the market. The 91 days treasury bills have a fixed discount rate. The treasury bill is actually issued at a discount, and it will be redeemed on the face value. For example, if 100 rupees, for example, I say if it is 100 rupees means original value 100 rupees, it will be issued at 96 rupees, and then it will be redeemed at 100 rupees. So the 4 rupees the investor will gain. 91 days treasury bill has a fixed discount rate, and also auctions, through auction also the rate will be fixed. The RBI has hold the 91 days and 182 days treasury bill, and it will be issued on the tab basis. Tab basis here means on the basis of demand throughout the week. And 364 days treasury bill, it do not have any fixed rate, but it will be fixed by the it will be quoted in the auction by the participants, and it will be accepted by the authorities if it is fair. So this rate is called a cutoff rate. Now let us move to long answer. The first question from sixth lesson. It is what is the difference between the money market and capital market? Here you have to write the features, that is the side heading, and then money market and capital market. The first one is the duration of fund is money market is for short-term loanable funds and capital market is for long-term funds. And supply of funds here, this market will supply for the financing working capital requirements of the industries and short-term requirements of the government. This is for the short-term fund only. And next is this market supplies funds for the long term, that is for the fixed capital requirement of trade and commerce and long term requirements of the government. It deals with the instruments like commercial bills and treasury bill, commercial paper, like that. And here the instruments that are dealt in capital market is shares, debentures, government bonds, etc. Here the money value, a single instrument is of large amount minimum. If for example a treasury bill, it minimum price is rupees 1 lakh. Each certificate of deposits or commercial paper rupees 25 lakhs. And here the single instrument value is a small amount. For example, each share value is rupees 10 and each debenture value is rupees 100. Here there is no subdivision in money market. Here there is a subdivision, primary market and secondary market. Here the risk, the low credit and market risk. Here high credit market risk is there. Underwriting. Here for issuing the instruments there is no underwriting function required. Here primary function underwriting is required. Okay, next is we'll move to the characteristics of money market. The first one is short-term funds, maturity period, conversion of cash, and then no formal place, and then highly organized banking system. The first one is short-term funds. It is a market purely for raising short-term funds or financial assets called near money. Near money, its examples are treasury bills, commercial bill, and certificate of deposits, etc. The maturity period is always less than a year, up to 1 year. And then conversion of cash. It deals with only those assets which can be converted into cash easily without the law, without losing more money, and with minimum transaction cost. And here mostly the transaction will take place through phone or oral communication, and relevant documents and written communication will be exchanged subsequently. So there is no formal place like stock exchange as in the case of capital market. It is highly organized banking system. Here the mostly the money market, commercial banks are the nerve center for the whole money market. So they are the principal supplier. They are the principal supplier for the short-term funds, and the commercial bank has a link between the central bank and other various segments of money market. Segments of money market here refers to treasury bill market, commercial bill market, like that. There are different segments markets are there. So it connects one side commercial central bank, on the other side the different segments of the money market. uh, thank you students for watching. If you like this video, please like, share and subscribe. Thank you so much.